Hey everyone, it's Daniel here from Infovest. I just want to quickly talk about, do a follow-up video actually of the last video where I talked about the recession and the CPI report. It was more of a rant than me talking about the data itself. But in this video, I'll talk about the CPI report and a little bit about inflation and what it means. So the CPI report that came out, it was as expected that the number would be lower. And why would it be lower for this report? Because last month we did see gasoline prices. Last month we did see natural gas price come off, right? So that fed into the CPI report. Now, if you notice one thing, and I talked about this in my previous videos, especially in the one where we talked about the European Union, the collapse of the European Union, the collapse of Europe, and the fact that they're being affected heavily by higher prices, shortages of crude oil, natural gas, and most importantly, the food. Right? Now, the food in the CPI report has increased to highest levels since 1979, right? And I mentioned this in the previous video that we can expect food prices continuing to rise. We're talking about food and groceries, food that you get from the groceries. Yes, food and restaurants and whatnot, but if that's too expensive, guess what? You're not going out that much, right? And in that report, we saw that, yes, food prices did increase, but less people, the food away from home did come down a bit, but the food at home, the groceries and whatnot, those went up and they continue to go up. And we talked about the phenomena of fertilizer, right? And the issue with natural gas as well. So if there's a shortage of it and part of the chemicals and natural gas goes towards fertilizers or pesticides, we talked about that in the European video, that certain chemical companies, especially in Europe, could completely shut down, which will skyrocket food prices. And there could be shortages as well. And if you look at the two top producers of fertilizer, it's China and Russia. So those two are very big producers of fertilizer. And if there's any supply chain issues, if there's any constraints, right, coming towards shortages of food, that's still going to seep in and feed into the inflation part. So sure, consumers' expectation of inflation may come off because, what you see out there from the gas prices when you're driving, you might think, oh, okay, prices are coming down. But in certain areas, like for example, maybe shelter and food, those may continue to be elevated and may rise. So, and those two are very essential, right? So your living expense, your food just to eat is going to get more costly and more expensive, and especially if shortages happen, which is still going to hurt the savings of a consumer. Now, of course, probably, crude oil and transportation costs, yes, they have come down, so that's helping. But it doesn't mean that the inflation story has been solved. And why I wanted to do a follow-up video is because I wanted to talk about why I was saying that we're not out of the woods yet. Sure, just because, gasoline and crude oil and natural gas, the prices are coming down, doesn't mean that the other sectors are, are going to be out of the woods as well. And doesn't mean, sure, they can come down in long run, but doesn't mean that, we've solved the inflation problem completely just because gasoline's down. Oh, gasoline's down, so great, it's solved. Now, it is a self-fulfilling prophecy where you do see, consumers looking at gasoline prices, hearing from the media, hearing from Biden, hearing from the government that prices are coming down. Sure, it may feed into the expectations, which will probably feed into business and spending. But then when, at the end of the day, you can't control the supply side of things. And you can't control the geopolitical tensions between Russia and Ukraine and China and Taiwan, which is a new added risk. So these risks, China, Taiwan, the shutdowns, the lockdowns in China, the Russia, Ukraine, and the Russia conflict with Europe. These added risks still can keep inflation elevated. And even if inflation does come down, it would have to come down either because the supply chains are getting better, these constraints and risks are getting better, commodity prices are really dropping, more inventory, or demand is just dropping hard. And that will eventually bring all the retailers, all the inventory, all the manufacturers who are selling goods and services to basically bring the prices lower, which will then reflect into the markets. But for that to happen, right, we need to see basically one of those factors solve on its own. And if the delivery time is getting better, the shipping time is getting better, the supply chain constraints are getting better, then yes, sure, it is going to get better. Prices are going to come lower in the next couple of months and couple of quarters. So that's what we have to look at, aside from also the Fed members, what they have to say, right? Important to hear what they have to say, because if they're still raising rates and you have inflation coming down, it's not going to make a good situation for the consumer, because you're still being affected by the higher rates. And if you look at the bond market, right, the 30-year bonds, the 10-year bond, right, especially if you look at during the day of CPI, where basically the 30-year bond went up and then it came off. The same thing on the longer end, the prices are coming off. If yields continue to be elevated, it's still going to cause pain for consumer when it comes to spending, even though inflation is slowly coming down. So, why I had that video about is the recession canceled is because, the reason is because it's not, and my views are it's not over, because of all these risks, because of, one, the Fed communication, second, the inventories, the third, China and Taiwan, fourth, Russia, Ukraine, Russia versus Europe, right? And fifth, food prices increasing, fertilizer costs. There's still so many risks that could affect the consumers. And China has been seeing their basically growth, their basically numbers deteriorate. They're seeing, an effect there. So the demand side will probably also help for inflation to come down. But it's not just going to go from 9.1% then boom to 2% or lower. It's going to be gradual. And sure, the markets may take it in a positive way, but doesn't mean we're out of the woods, right? So these are some of the factors. These are some of the risks, and these risks can still arise, right? The supply chain issues can still arise from all of this. So let me know what you guys think. Leave a comment below if you think that inflation is going to continue to rise. Let me know what you guys think about food, right? Food prices continuing to rise. I mean, if that continues to rise, it's going to hurt even more, because you need to eat. You're going to look for alternatives. And can food prices come down? Sure, it can. If the commodity prices are continuing to go down lower, it will seep into that. Same thing with maybe also shelter as well. And if, we do have a very big issue on the demand side, then that could also definitely seep into lower inflation, lower prices. So we're not out of the woods. Inflation is still elevated, and we'll have to continue to watch data by data, and also what the Fed has to say. And even if you get lower inflation and Fed wants to go and still continue interest rates and hiking rates, again, we're not out of the woods. So anyways, I just wanted to clarify that and do a follow-up on that video. All right, guys, leave a comment below, and I'll see you around. Thanks. Bye.